All right, good afternoon, good evening. Welcome to today's live recap. Now, heading into the open, our short-term and intermediate-term bias was bearish, and how ES behaved at the 40.92 half to 41.03 initial support would be very telling. If the market held above that area, then it would be a sign of short-term stability. ES was set to open far below value. So in order for it to continue selling off and in order for us to have bearish time frame alignment, we would need to see a breakdown below initial support, and we would need to see continued weakness and sustained downside momentum. And simply a lack of weakness would be enough to attract responsive buyers, which could result in intraday bounces towards pre-market and initial resistance. Now, if the market were really weak and it was eventually going to break down, then ideally sellers could hold it below the initial resistance zone. And if it was really weak, then even below pre-market resistance. A breakout above initial resistance would be a signal of strength and could lead to a test of 41.79 half to 85 half, where sellers could be active on first test. And then the bigger and more significant area of resistance was up at 42.05 quarter to 16 quarter. That was the broken larger time frame support that would now act as larger time frame resistance, and a break and hold above that zone would be a bullish indication. And from there, if we could take out the overnight high at 42.22 to 28, that would be a bullish confirmation, and that would then open the door for range expansion into the resistance areas above. And above that area, the 42.50 to 60 was a spot where sellers could be active, and the higher the market pushed, essentially the better the resistance it would run into. So that was the context as we were heading into the open. Now let's jump into the chart, see how it played out. And today, instead of just going over trade setups and talking about just the day, I think it's worthwhile to spend some time on this very key idea of situations when the market's opening either at the bottom of a balance area or if it's opening far below value. I'm sure you've heard me say this many times, that simply a lack of strength at like a balance area high can attract sellers, or simply a lack of weakness can attract buyers. And the onus is on the sellers when the market's opening far below value. So I'd like to dive into that a little bit more. We talk about trade setups every single day, and of course, there's value in that because those patterns are repeating over time. So it's not like, they only happen once. So repetition is how we learn. But I think we really need to make sure everyone's understanding this idea of, seeing a lack of weakness, right? Like if we look at today, if you look at the tick, there is clearly a lack of weakness, right? The tick is very balanced. We're getting, if anything, like either similar or better upside readings on the NYC tick, and that's not what the tick should look like if the sellers are indeed in firm control. So what I'd like to do is pull up some notes from the Open Trader mentorship, and we're going to go over one of the topics that I cover in the mentorship, and it's initiative versus responsive, right? Understanding initiative activity and responsive activity. So we'll start with initiative. So anytime you're at the balance area high, and of course the same applies to balance area low, but anytime you're at the balance area high or trying to break out above a larger time frame balance area, you need to see initiative buyers active in order to get a sustained breakout, because it's not about a breakout attempt, right? It's about having a successful and sustainable breakout. And for the upside scenario, simply a lack of initiative buying can result in failure or a false or failed breakout. Now, what is initiative buying? What does it look like? So initiative buying would be visualized or recognized, or like how do we detect it? So it would be detected by seeing sustained upside tick readings, usually at least plus 7 to 800, and the higher the better. An advanced decline line that is trending higher and at a good positive level, usually plus 1000 or more, but that's not a strict requirement because the AD is based on the previous day's close. The more important thing is that it's at least in positive territory and it's trending higher. And ideally, you want participation from the other markets as well, combined with relatively strong price action, right? Higher highs, higher lows. And the same applies to the downside. When the market's trading at a balance area low or testing a strong area of support or opening way below value, you would need to see very weak internals, sustained negative tick readings, right? Minus 800 or lower, downtrending AD line, and downward participation from the other markets. So you need to see some real selling pressure in order for us to say, yes, this looks like initiative selling, right? Responsive activity is the other side of the coin. So responsive activity is not signaled by anything on the internals. When you're at the top of a balance area, simply a lack of strong buying or a lack of initiative buying can attract responsive sellers, because responsive activity is based on trade location, not a real-time signal on the internals. Responsive sellers are stepping in at or above the balance area high because they perceive the market to be too expensive and overvalued, right? So they don't need to see anything on the internals. They are responding to the actual price, where the market is trading, hence the term responsive, right? And the same concept applies on the downside, where buyers perceive the market to be too cheap or trading too far below value. So by definition, responsive buyers and sellers are value seekers, and it is a reversion to the mean strategy. And the mean is whatever the perceived value may be. Typically, the market will bounce back to like a high volume node or something, right? Because a high volume node represents agreement between buyers and sellers. It represents a price level where a lot of trade took place, where the buyers thought they were getting a good deal and the sellers thought they were getting a good deal, right? So there was agreement between buyers and sellers, and that's what creates the high volume price or the high volume node. So responsive buyers or sellers are bargain hunters, and a trend day is sustained initiative activity in the market where buyers are buying at higher and higher prices, or in the case of a downtrend day, sellers are willing to sell at lower and lower prices. So initiative participants are not price sensitive, whereas responsive participants are, right? They are responding to the price itself. Initiative, they're not concerned about price. It's more of a momentum strategy, right? It's more of a momentum play. Now, what are the trade ideas that we can get from this idea of initiative versus responsive? So when you're at the top of a balance area or above a balance area trying to break out, simply a lack of initiative buying can result in short setups. And when you're at the bottom of a balance area, especially at strong support or below a balance area trying to break down, simply a lack of initiative selling can trigger long setups, right? So this is really the idea that you've probably heard me mention many times when the market is set to open either at the edge of a balance area or way above or way below a balance area. So typically in the trade plan, I'll say, hey, in order for this trend to continue, or in order for us to get a bearish confirmation, we need to take out the zone and we need to see broad market weakness and sustained downside momentum. So I'm kind of summarizing, what initiative activity would be, just because I don't want people to get lost in the terminology, right? Not everyone is going to know what initiative buying and selling is, and it doesn't matter. The terminology is not the main thing here, right? We have to understand the principle and the idea. What it's called is just a name. It's just a label. That's not the thing to focus on. But if we're all on the same page, it allows us to communicate via shorthand, right? Then I can just say initiative buying, initiative selling, and you know exactly what I'm talking about. I can say responsive buying, responsive selling, and you know exactly what I'm talking about. I don't have to repeat the whole, sustained momentum, AD trending in this direction, this type of price action, right? It just kind of summarizes it, makes it quicker to communicate. But the label is not the point here. The point is to really understand in what situations, what we need to see in order for that breakout or trend to continue. And this is a very key idea for today because the market was set to open far below value, right? And I think I mentioned that in the morning trade plan, that the market's opening far below value. It has sold off quite a bit in the overnight session. Now, if it had taken out initial support and we were seeing initiative selling, then we would want to completely back off from the long side. Because if we are seeing initiative selling, then there's no telling where it's going to stop. Then we're looking at bearish time frame alignment. But if we hold initial support and we start noticing a lack of weakness, again, we don't have to see outright strength. We don't need to see big upside ticks. Simply a lack of weakness would be enough to attract the bargain hunters, the responsive buyers. And in that situation, if the market's holding initial support and we're seeing a lack of broad market weakness and a lack of downside momentum, well, then we may just balance in a range. Then we may not continue the trend or the breakdown attempt from the overnight session. So that was kind of the key lesson that I wanted to communicate today because, we, again, talk about trade setups all the time. And not to say we're not going to talk about trade setups, obviously we are. But I wanted to get that out there so that everyone is hopefully on the same page here. So now, looking at today's price action, the question that you have to ask yourself is, are we seeing initiative selling? Because based on some of the responses I saw on Twitter from some of the traders and members who are active on Twitter, a lot of traders were looking for a move down to initial support and a breakdown below it or something, right? So this is a very key question. Are we seeing initiative selling? Now remember, what do we need to see in order for us to say, yes, this looks like initiative selling? Tick holding completely for the most part below zero and printing some decent downside values. An AD line that is in negative territory and trending lower. What are we seeing today? The opposite of that, right? AD line trending higher. Right? We're not seeing an AD line trending lower. We're seeing an AD line that is trending to the upside, right? So we have an upward trending AD line, the opposite of what initiative selling would look like. And we have an NYC tick that is more tilted to the upside, or at the very minimum, we can say it's neutral, right? We would not consider that to be a weak NYC tick. Early in the session, sure, it looks weak. But once we get this new tick high, after that, it's either balanced or a little bit upward tilt on the NYC tick. So it doesn't mean that we're seeing initiative buying, and we don't have to because we're not at a balance area high, right? We're at a balance area low. We're trading below value. We don't even need to see strength, but we are. So at the very minimum, we need to be a bit more careful on the short side now. Now the short term is bearish, the intermediate is bearish. We can still look for shorts at good location, but the way we manage that trade is going to be different now. It's not going to be necessarily looking for a big breakdown below initial support or, a big continuation move to the downside. Because the real-time conditions are simply not conducive of that. Very balanced tick, upward trending AD line. Now let's look at the price action. What's happening on the intraday price action, right? We essentially start with either you could call it more of a bit of, not really an open drive, but a bit of an open drive. I think in market profile terminology, you'd call this an open rejection reverse. Again, not that it matters. It just means the market's opening way below value. It's rejecting lower prices, and it's reversing back towards the prior range or back to the mean. Again, don't worry about the label. It's just a way to, talk in shorthand. So the opening type, again, not that it matters what market profile says, but it's open rejection reverse, right? So we get a open drive type move higher, a little bit pull back, we hold, we go higher, we take out the opening range high, we pull back, we hold the RTH mid. We go up into resistance, we pull back, we hold the mid VWAP again. We go up into resistance, we pull back, we hold the RTH mid and VWAP again. What kind of price action is this? Is this initiative selling? Clearly not, right? We're getting higher highs and higher lows on the intraday time frame. We would need to see the opposite. We would need to see at least one of these swings get taken out. And you can see that throughout the day, we don't take out any previous low. And this is on a 2-minute chart. This is a very small time frame, and we're not even taking out swings on this intraday time frame. That needs to tell you something, because we need to be good listeners of what the market is communicating, right? Because this is just information. This is just the market is not for us or against us. It's not the market screwed me or like that. That type of self-talk or dialogue is very detrimental, very damaging. We need to have a very kind of neutral stance in the face of price action. So we can go in and we can say, hey, overnight there was a breakdown attempt and there was a pretty decent liquidation. And because of that, the directional view favors the sell side. But remember that as day traders, we always have to take the intraday price action and the intraday situation into account. We're not swing trading, right? We can't afford the market to go against us by 40, 50 points and then resume the bigger move. We're trading on a very small time frame, so we need to be in sync with that time frame. So looking at what's happening on the intraday time frame, it doesn't necessarily mean that we are now going to be looking for long setups, but at the very minimum, it can inform how we manage our short setups, right? So we can still take the shorts. The market pops up into initial resistance, that's fine. Short it, but when it comes back down into RTH mid and VWAP, take a big chunk off. That's one of the benefits of scaling out. Or if you're an all-in, all-out trader, then it's going to be a little bit tougher because you may want to hold it because there is that possibility of a bigger move down. But again, those are the pros and cons of scaling versus all-in, all-out. All-in, all-out is a little bit more binary. But if you are scaling out the way that I do, then you would take a quick 1 to 1.5 hour, maybe 2 hour scale out, and you take a lot of the position off at the RTH mid, and you can hold some with a stop at the swing high. You can hold the remainder of the position because who knows, maybe it is going to break. And if it does, then fantastic. You're still holding like a third of your position. And maybe you can even add to it later on as an independent trade setup. There's always that option as well. But you don't have to lose on these trades if you are scaling out. So from there, we pop up into the next zone, right? It's still okay to short that area because we're still holding below the bias changing or bias confirming zone, which was that larger time frame support turned resistance. So we can still short up there. But as the market pulls back into the RTH mid VWAP, the 24-hour VWAP, the broken resistance, which may act as support, we want to again take some of that position off, lock in some of those healthy gains because, it's not like it's a small move. The market's going from, 83.50 all the way down into like 48. It's a pretty decent move on the day time frame. I think maybe some of us are getting a bit spoiled recently with all this volatility. But, just a few months ago, this would be like the range of the whole day and, that's it. So let's keep things in perspective. The market's moving from the 79.5 to 85.5 zone down into, let's say if you're even exiting at 50, you're getting 30 points of profit on a trade that would require maybe a 5 to 8 point stop. So that alone is for anywhere between 3 to 5R, depending on your specific execution, maybe a little bit more even. So we're still okay with shorting, but we just want to recognize the lack of weakness. We need to adapt to the idea that we're not seeing initiative selling. And maybe the market's not going to break the initial support zone, because remember, holding above it is a sign of stability. Initial support was the bias changing, bias confirming zone. If that got taken out, I think it would have been really bad. I mean, I think it would have gone down a lot. But that zone didn't get taken out. And we did not see initiative selling today. So at the very minimum, because I think, flipping the bias completely and buying and starting to buy the market and going long is difficult. It's not easy to make that transition, but it is very doable to at least manage your exits a little differently based on the real-time intraday situation. So, there are some really good zone fade setups today. Pretty much every zone provided a very nice response, as long as you were willing to book those gains, as long as you were willing to exit and recognize that we're not seeing initiative selling. So we have a short sequence pretty much at every zone. We come back down. Now you can see again, we're holding. We're not taking out the previous swing low. We're holding the previous swing low here. We're holding above the mid VWAP over here. Broken resistance, starting to act a bit more like support now, the broken initial resistance zone. And again, the NYC tick is very balanced or slightly skewed to the upside. So again, at the very minimum, we want to get out of the shorts and lock in those gains. Now, if you're really flexible, you could technically even buy one of these pullbacks, but that I know is very difficult to do, myself included. I didn't buy. So, if you didn't, well, we're in the same camp there, because it is quite difficult to completely reverse the view. And, buying a market like this, which is so news driven, and, with everything that's going on in Ukraine, is certainly a bit more risky, right? We talked about this yesterday. In the recap, that yes, the market's coming down into that larger time frame support that we had at 42.08 to 16, but can it provide a bounce? Sure. Can it technically hold? Sure. But because of that geopolitical situation, we need to be a bit more careful buying 42.08 to 16 now, even though it's strong support, right? So today I feel like that was the issue or the challenge or the risk was, if you're buying this market as a day trader, because it's different if you're an investor. If you're trading on a much larger time frame, it's a completely different situation. But as a day trader, our margin of error is very small, right? I mean, we'll use a 5-point stop, maximum maybe 10 or 12-point stop. So that's our margin of error. Now, in a market that's moving 120, 150 points, that's what, 5% of the range, of the day, 10% of the range max. It's a fairly small margin of error that we have. And that's the reason that, we have to kind of think twice before putting on trades, and we have to be much more precise than someone who is more of a long-term investor and can kind of sit through some slightly larger moves against them, perhaps, right? So buying today, I think, even though from a technical standpoint, you can make the case for some longs today, because of the market driver, I think it made it difficult to buy. So in any case, the market hits that larger time frame zone. That's a valid short. We are getting some better momentum into it, but that is a very key spot. That is a bias changing zone. That's the larger time frame inflection point. So it would be completely fine to take a long setup there. Now, if we look at the launching point of the breakout attempt, that is roughly around here. So like 76.75 to roughly 78.5. And, this is really kind of the move that tries to take ES outside of the intraday range. Now, if we had gotten a breakdown below 76.75 or so, then it would have turned into a false breakout, and then perhaps we could have gone back down towards, the bottom 50% of the range, or the bottom quadrant of the range. But that didn't happen. We can see buyers stepped in. So again, if you are shorting it, definitely good idea to scale out at the broken resistance with the confluence of the first hour high. And what you want to see is now some new tick lows, ideally, right? You want to see like minus 1,000 on the tick, because the market was testing a larger time frame area of resistance. So if that zone is going to hold, then it needs to attract larger time frame sellers, and we need to see some aggressive selling coming in order for that zone to hold and provide a bigger response. But in this case, you can see that as the market comes down into the first hour high, we're getting minus 400, minus 500 on the NYC tick. Now compare that to the readings that we were getting on the upside, plus 800, 900, right? So we're definitely not seeing initiative selling, and we are still trading below value, below yesterday's range, and we just didn't get that big downside momentum. So as the market's balancing here, if you're short from that larger time frame zone, and the market's giving you a nice exit at 83.50, and you're not seeing that bigger selling coming in, take majority of the position off, tighten the stop, and then once we break out above that larger time frame zone, now we have that bullish indication. We take out the overnight high, we have a bullish confirmation. The intraday bias is now bullish. We're moving up on some big upside momentum. So now we need to back off from the short side as well. We're also heading into the last hour. We know last hour zone fades are definitely quite risky. And as a rule, we avoid fading the market in the last hour. So if you stuck with that rule today, then you avoided that last hour spike higher. And that rule exists for a reason. It's not going to work every single time, no rule does, but it will keep you out of trouble probably 8 out of 10 days, if not 9 out of 10 days. So the last hour rule of not fading the zones was really helpful today. And, I see a question here saying, should we take the long after it broke 22 to 28 zone? And again, I think given the environment and given the geopolitical risks and this market being so news driven, it'd be very difficult to buy. From a technical standpoint, sure. From a technical kind of charting, methodology, technical analysis standpoint, sure. Like I said earlier, there are long setups available even earlier than that. But looking at what's happening in the world, looking at what's driving this move lower, I think that it would be quite challenging to buy as a day trader, right? Again, investor, different situation, different time frame. But as a day trader, I think it'd be tough because it's very high volatility, and some new news event comes out, some new development happens, and maybe the market tanks 30, 40 points and then bounces right up. That's the type of market we're in. I definitely felt much safer shorting the market at zones rather than trying to buy the market today. Just again, because of our time frame. As a day trader, I felt much more comfortable shorting the market at key zones rather than trying to buy and look for a breakout or something. Let's see. So Red is saying, is it right thinking that since it is holding initial support, take longs even if short-term and intermediate term is bearish? Well, you'd want to get good location. I mean, when the short-term and intermediate is bearish, as you can see, like every zone pretty much provided a response, right? With the exception of the overnight high, pretty much every zone provided a response. So you wouldn't want to be aggressively long, but if you can get good location, then it's certainly a trade idea that would be worth exploring and trying out. Tom is saying, would you use automatic orders at resistance zones? Yeah, I mean, if you're taking zone fades, that's usually how we're doing it. It's with resting orders. We're not waiting for the market to get there and then figuring it out on the fly. You want to do all that stuff before the market gets there. You want to set up your trade before the market gets there, and have that order or that that idea, that trade set ready to go. Um, Pius is saying, have you seen this much volatility in the market? Is it equal to 07, 08? It's I don't think it's as crazy as 08 still. Because keep in mind that in 08, the market was not trading up at 4,200, right? Like in percentage terms, if you look at percent moves, they were crazier in 08 because ES was trading, down at between 700 to like 900 back then, right? And it was still moving 90 points a day. So, think about that. It's percentage wise, it's a lot. Now when we get a 100-point move, as a percent of the value of the contract or the value of the index, it's not as big of a move. In absolute terms, sure, but in relative terms, it's not. So no, I think 08 was much more volatile. The VIX was much higher in 08 than it is now. Shirkant is saying, when we think about initiative versus responsive, are we considering a higher time frame balance area? Yeah, it is based on a larger time frame balance area, typically a multi-day balance. It's not based on like a intraday balance. This idea of initiative and responsive applies to the larger time frame, and you would need to identify balance areas on the daily chart to use this principle. David's saying balance area high-low, is that the lower and upper portion of the day's market profile? No, it's the range on the multi-day time frame. So if we had to, identify multi-day balances, we would say like this is like a balance area, right? Like what is this, like 5 days or something? This one up here is a balance area. So this is what, like something like 8 or 10 days. This would be like a 4-day balance area right here that we broke down below, right? Like this. So this is the breakdown. And then keep in mind the markets are fractals, so you have these smaller balances, but then this entire range can also be considered a large balance area. And that's the thing, today we were breaking and opening way below value and opening below a much larger time frame balance area. So down here the onus is on the sellers. They have to prove that they can maintain control. We know that a break below that 4208 confirmed the sellers in control, but now it's overextended, and in order for it to continue, they need to prove that they can maintain control. So down here, we need to see initiative selling. And if we don't, then the default kicks in, which is responsive buying. We're just saying, could we have had the short-term bias as neutral bearish instead of bearish because it went down too much? Yeah, I did think about making it neutral bearish because it had gone down too much, but I guess erred on the side of caution because of just the driver of this price action, because of the geopolitical conflict and the whole Ukraine situation. I didn't want us to be looking for any aggressive longs, at least. But that being said, I think that it's good to have the directional bias on the trader worksheet. It kind of, at least it's my attempt to make things more black and white. But remember that markets are complex and it's difficult to put it in a box. And that's where the trade plan comes in. That's where the video comes in. And, that idea of, hey, if we hold above initial support, it's a sign of stability. And if we break down, that is what would trigger bearish time frame alignment. That's the key idea that needs to be picked up from this morning's video. Tristan saying, did the break above 4250 to 60 trigger a bigger picture failed breakdown? I think that even the break above the 4205 quarter to 16 quarter and the overnight high, I think has potential to trigger the false or failed breakdown. Now, it's a little bit early to say. And the reason that it's a little bit early to say is because on the daily chart, the move starts quite high and then kind of goes straight line down. Um, if the market had come down and then we had a couple of days of balancing above 4208 and then the move kicked off from 4208, we would have a clear breakdown bar. Right now, we don't have that. Right now we have a situation where we got this big move down, retracement, big move down, retracement. So I think it's early to say because we never really got that proper breakdown pattern. That we could say, yes, this is a clear balanced breakdown. Right now the pattern is a little bit still kind of under development, and this is kind of the bigger swing that we're working with right now. So you can see we've bounced back up pretty decent, about a 50% roughly retracement of that swing. And I think if we take out like this high over here, that would be a pretty significant development. That would tell us a lot. So I think if we take out like the 43 quarter to 45.75 zone and 43.50.75 to 60.75, I think that would be quite telling. And that's why, like on the trader worksheet, this particular zone is a bias affecting zone, right? Break and hold above equals bullish, so we know this is a bias changing zone. And then if we take this out, that's a bias confirming zone. So I think on the upside, these areas are going to be, like all of this is going to be very key. If we get a breakout above these two, that could be the beginning of that bullish phase. And if we break out above here, then that confirms it and it opens the door for, maybe another, maybe 100 points or so higher, maybe more than that. So I mean, there's resistance above here too, but that would probably be that confirmation of a failed breakdown. But right now, it's not something we can clearly say because of the way that it broke down. I mean, you can think of the same idea applying here, right? You know how the move starts up here and we break down? Well, there's no clear breakdown bar because the move starts up here. In order for there to be a clear breakout or breakdown bar, the move has to start from the edge of the range. So like if the market had come down, balance, and then imagine this bar initiates here at the bottom of its range, that would be clean and clear. But the move starts here. So that creates a situation where the market, even though is attempting a breakdown, it gets overextended as it's trying to break down. And then we get that 50% retracement. And then we get continuation, right? Same principle can be applied when we measure from this swing high to this swing low, and that's why I'm saying that if we take out, that 61.8% retracement, if we take out the 43 quarter to 45.75, 32 to 36, then we could say, okay, the pullback has completely failed. So it reduces the odds of this scenario, right? This is the pullback, this is a continuation. So if we take out those highs that we talked about, the zones, then it reduces the odds of continuation. But if we fail here and we start coming down again, that's when the bearishness can continue. So it's just early to say, because the way the pattern has developed. All right, guys, so that's about it from my side. As we head into overnight, on the upside, the existing areas are still valid and in play. Those are still spots where, technically sellers can be active. We're already seeing that in the overnight session, I believe. So, those are still key areas where sellers can step in, and perhaps we can balance overnight. But right now, this on the larger time frame, this is a pattern that is under construction. We don't have enough information to lean one way or the other yet. I think that at this point, the prudent approach would be to leave the intermediate term bias as bearish and change the bigger picture to neutral for now, and the short term either to neutral or neutral bearish. I think that would be kind of the prudent approach at this point in time. So Mutu is asking, since the large time frame zone of 4205 to 16 was taken out, does this indicate a false breakdown? I've already elaborated, I think, enough on that, so I'm not going to jump into that topic again. We just talked about the idea of a false breakdown. So I'm going to leave it at that. All right, guys, thank you for attending. I hope you guys all did well. I hope the 10 or 15-minute discussion on initiative versus responsive was helpful to you. I think with today's video, I will also take a PDF of the notes that I showed earlier, and I'll post those with today's recap so that you have a reference going forward. All right, guys, that is a wrap. Enjoy the rest of your evening. If you have any family, friends in Ukraine, I hope they are all safe. Let's hope this conflict ends swiftly and without a whole lot of damage. I know we're talking markets here, but there are more important things. So let's hope this doesn't spread and expand into something worse and bigger. And let's hope it's a short and quick conflict there. All right, guys. Thanks for attending again. Recording will be up shortly. And as always, we will catch up bright and early tomorrow morning and get prepped for probably another pretty busy trading day. All right, take care and enjoy the rest of your evening. Good night.